Hey everyone, I want to welcome you to today's episode of the HX podcast. Today we're going to do a little bit of a different format. One of the things that we've been thinking about is basically doing a format where we will talk to readers, our audience, and we will address their questions about the markets, about assets, about crypto, etc. I want to make a point. I will make a point here that this is not personal investment advice. What we're doing here is we're talking about the markets overall in a big picture basis, but we get tons of interesting questions from our readers, and so today we actually invited one of them on. If you all who watch all of our videos will know that when we did the free idea the other week, we actually had a reader, Randy Nichols, on that video. So today we actually have Matt Rocker joining us to talk about crypto. How you doing, Matt?
I'm good. Good to see you.
Yeah, very cool, very cool. So Matt and I were talking the other day, and he started having a bunch of questions about crypto, beginning with Bitcoin. And so what I thought would be useful is that we brought those questions, we had a really interesting conversation. I thought it'd be interesting to bring those questions here because I think he has a lot of the questions, similar questions to what many of our readers and audience might have. So let's just dive into it. Matt, hit me with your best shot. What are you most interested in talking about in regards to crypto?
Yeah, well, I'll say that I think some of this got inspired by your conversation with Eric Wade, which was great. I found him really interesting. And of course, he's saying buy Ethereum, full stop. And things were just starting to be on the climb up there. And, all of us, I think, over the years have been tempted to jump into the crypto market.
Yeah.
And as was I, tying that with some of the other stuff that I've learned listening to the pod, I'm interested in taking some of your analytic concepts that apply to the market and seeing how many of those can you actually reliably apply to crypto.
Okay.
And maybe a good place to start is one of the big indicators that you're always talking about is RSI.
Okay.
And I understand the basics of what it is and how and when you should be looking at the levels and where it's going. But probably the first thing is nuts and bolts. How is that actually calculated?
I'm going to give you a funny answer. You shouldn't care. The actual calculation, which you can look up on Investopedia, is taking the price change across 14 days, and it basically calculates a ratio of the 14 days. And if you go through the calculation, it's like a ratio divided over a ratio. When you go through the math of it, it won't be helpful to you. It's funny, is one of our colleagues, Jessica, asked me this question the other day too, and I showed her the equation, and we can pull it up here. Hold on one second. Let's see. Okay, here we go. So here's what you do. Two-part calculation starts with the following formula. 100 minus 100 divided 1 plus the average gain over the average loss. That's the average gain across the 14 days and the average loss across the 14 days. Okay, let's go then to, you can see here the first calculation. It's 100 minus 100 divided by 1% divided by 14, 0.8% divided by 14. So imagine that in the 14 days, you took all the days where it was up and it was up 1%. The average, all the days it was down 0.8%. And then the second calculation, what you're doing is you're smoothing it out to take it towards a number that's 0 to 100. Okay. And then you can look here, you go plus the current day gain plus the current loss. I just gotta be honest with you. It's kind of mumbo jumbo. What I care about is what it means. And what it means is that equation is telling you about the velocity of an asset. So I'm going to pull up another chart here. Let's actually go, because we're going to deal a lot with this chart. So here's the chart of Bitcoin. This is an RSI chart, okay? This is what you need to know. So velocity is the rate of change. If something's moving really fast across a very short period of time, it has a high velocity. That would generate a high RSI. Here you can see, look at the Bitcoin on October 18th goes from 28,000 to 34,000 in just a couple days. We get an RSI reading above 85. Here it goes from 40,000 to 45,000 just a couple days. We get an RSI above 80. Here, let's go wait where this is where the kind of the post ETF, like people really got excited about the ETF on February 26th. We go from 54,000 to all the way up to 63,000 in just a few days. You get a high RSI. Conversely, is if it's collapsing, we see this collapse here back in August. I don't remember what happened in August, but we went from 30,000 down to 26,000. So I guess this is a long way of saying you shouldn't really care how RSI is calculated. You should only care what RSI means. It's telling you how quick something is moving, what the velocity is, and then that's information that you can use to help your trading. And the simplest rule I'm going to tell you is things that have very high 90 and above or 85 and above RSIs for extended periods of time, are vulnerable to violent retracements. Things that have very low RSIs, if you believe in the asset, below 30, are interesting to buy, especially once they recover above 30. Those are the two big rules to remember as RSI. Then you have to take it into context once you get there. So is that kind of helpful?
Oh yeah, absolutely. I mean, I just didn't know the variables, and of course I could have looked it up, but that's what you're here for, is to educate people. You know? And so is to understand that it is nothing more than rate increase and decrease of a curve. That all makes sense to me. I'm kind of a math and physics geek, so you can just by looking at the actual graph of the price, you can even sort of estimate, you can eyeball what the RSI is going to be.
Absolutely. If I'm looking at a chart, like I sometimes will see a chart on CNBC and I'll go, oh, I should check that chart out, and I'll go check out the RSI because I know it's going to be. Just look for anything that has spikes. Okay. Yeah. So if it could be upward trending, could be downward trending. Because here's the thing, you could have, because it's a 14-day thing, you could have a stock that hasn't gone down at all for 5 years, and then it gets a low RSI because it happens to go down across those 14 days. You can have a stock that hasn't gone up in 5 years, but then it happens to get a high RSI because of those 14 days. So I would just look for whatchamacallit, for spikes upwards and downwards on charts, and those are the RSI.
And the other thing that I'm interested in is, this was going to be another question, is, does that, well, I can see that it's on Bloomberg, so I didn't know how much and when Bitcoin had sort of been entered into this sort of real world trading environment that you're able to pull it up in the same way that you can pull up Apple and Google and et cetera, et cetera.
Yeah.
Which brings us to...
Can I stop you there for a second? Because I got this question the other day from one of our other readers who's actually going to be joining us on Idea. He said, where can I get the RSI yourself? I don't know is the answer. I get it off Bloomberg and I use it there. I would just look online. Like I see something here. We're doing this all real time, folks. Something that's called Profits PI. It looks like they will give you the RSI. Webull, the stock charting tools. I think if you just go online, there's something called stockrsi.com. It is out there, but we get ours off Bloomberg. But it's not easy to get. It's not on Yahoo Finance, or I don't think it is. But this is, if you were to ask me, the two most valuable things you need to know about a stock, honestly, just across the board, are the price chart, okay, because that's obviously the price, and the RSI, because those are going to be how you can triangulate your near-term trading and sort of optimize it.
Yeah, and I mean, if you were a real geek, which I kind of am, and was also interested by John Roque that you spoke to a couple weeks ago, he was, I'd still do stuff on paper. I could drop that stuff into an Excel sheet that I could create that could calculate RSI for me, and I would not have to worry about that. And
you could, but I will tell you, it's quite the calculation, and you probably can find it at one of these sites pretty easy. I'm very happy to have Bloomberg and not be doing that.
Exactly. But just the sort of concept of it, and then that brings us to the fact that Bitcoin is on Bloomberg, which is part of what sort of started to change my thinking about crypto. Is okay, it's being embraced by the larger world. It's not just for the nerds and the tinfoil hat people who think that it's going to change the world. It's been, what BlackRock is buying billions of dollars of crypto right now. So that made me think, okay, this is really entering the real world.
Can I ask you a question though? That was an insight that you just had, like in the last month or so, because of the BlackRock and the ETF. Would you say that was like that insight? Okay, that's important because let me do this. Let me give you our quick thesis on Bitcoin and the thesis that we've had for quite some time. Okay, and we talked about this with Eric a little bit. Bitcoin is digital gold. And I'm going to talk about gold for a second because everyone can understand gold. Gold's a metal. It's shiny. It's gold colored. It weighs a bunch. It has some limited industrial uses. Of all the gold we produce every year, about I think 12, 13, 14% could be used for electronics, et cetera. I'm not counting jewelry, but I actually think the jewelry is not a lot more in there. And if you took all of the industrial uses, we have enough gold for 400 years. So unlike copper, unlike iron, unlike these other metals we have 100% industrial use, gold doesn't really have an industrial use. And so my view is the value of gold is only because we put value into gold. We've all decided that gold is a valuable precious metal. By the way, there's a lot of metals out there that are a lot more rare than gold and that are a lot prettier than gold, not to mention all the metals that are out there, that have a lot more industrial use. Why don't we take a much rarer metal with great industrial uses and all of a sudden ascribe value to that? That one seems like it has a fallback. No, we've chosen gold. And why did we choose gold? Who knows? It was discovered thousands and thousands of years ago. And so we've all decided to ascribe a value to gold. And if we all decide to do that, it has value. One of the examples that I used to use was baseball cards, right? A baseball card, you got a Thurman Munson, he was a famous Yankee baseball card. It's a piece of paper that was printed in 1978. It's got a picture printed on it. The whole thing's worth, 0.001 cents in recycling or something like that. But that card sells for $10,000. And the reason is a bunch of people decided to ascribe value to it. So this is important when we talk about Bitcoin, because Bitcoin, unlike owning a stock or a bond, doesn't have any cash flows, doesn't have any earnings. It's simply a device, like an entity that we've decided to ascribe value to it. So let's get back to your BlackRock point. The question becomes what's happening is as more and more people decide to ascribe value to it, since there is limited supply, just like there is gold, and just like gold, we're producing more, but it's difficult to do. As more incremental buyers come in, i.e. BlackRock via the ETF, more demand is created for Bitcoin, and it can go higher and higher and higher. Now, the one question I know people are going to ask, and this question is kind of quirky. It's kind of like the RSI thing. I don't really care what the calculation of RSI is. I just know what it means. People ask, well, what's the value of Bitcoin? What's the price target in Bitcoin? And this is what I say. I go, well, the value is whatever anyone's willing to pay for it. There is no value. There are no cash flows, anything else. And what's the price target in Bitcoin? I don't know, because there's no way to ascribe that kind of analysis to it. But what I do know is that if we look at the supply of Bitcoin, while it's growing, it's coming down the growth, and that's eventually going to top out unless Bitcoin gets hacked. And that the drivers of demand, people being worried about the value of the dollar, people being worried in emerging markets about losing their currency, younger people who are more digitally enabled coming up and through the demographics, older people beginning to believe it. If anything, the fact that Bitcoin is working and going up causes more people to believe it, which causes it to go up more. So my view is Bitcoin goes higher. Now, is higher 75,000? Is higher 750,000? Is higher 7.5 million? It could be all of the above. You're never really going to know. What you do instead, though, is you trade it around the technicals, which tell us about the emotion and the balance of supply and demand. But that's the basis. So, because I want to get to your BlackRock thing, because that BlackRock moment, it was key and is key both for the recent future or the recent past and the future of Bitcoin.
I wonder if this big spike that we hit in the last couple of weeks, is that a representation of this huge new influx
Yeah.
And yeah.
So let's deal with that, because I'm going to get a little technical here, and this will go back to RSI. In general, if I had to put so again, you look at populations, right? 100 times something happens. There's a majority of those populations. What happens next? Okay, as a general rule, if an asset goes through an 80 or 90 RSI, the next 10 days and next 10 months for that asset tend to look very good. Okay. Now, I say a general rule. Why did the asset go through? Sometimes there could be an announcement, right? And an announcement, a company's announces big earnings, or a company has a drug that worked or something like that, and that fundamentally changes the value of the company. Sometimes there could be an announcement, and the next day another announcement comes out. So, you got to look at the probabilities. But in general, breakouts that achieve high RSI are very good in the very short term and very good in the intermediate long term. Where they can be problematic from a trading perspective is if they persist at that overbought level, and that actually ends up being very bad for that interim period. So this is what I'm saying about Bitcoin. And we just put out an article in HX Daily yesterday on Tuesday. We put something out talking about the moving averages. I would look at this chart and I would say this. So let's go to the chart here. A couple things. We had a really nice, let's go back to 2022. Okay. And this gets into a conversation of moving averages. We had a really nice base at Bitcoin around 20,000, right? It hit 20,000 in June of 2022 and get all the way to March of 23, it was there. Then we had a breakout. Okay, and you can see here, we had two breakouts, right? You had this high RSI here, this high RSI here. Look what happened here from the January breakout. Bitcoin then consolidated. So the first breakout, when it hit this initial RSI on January 14th of 90, it was, January 14th of 23, it hit 20,903. It actually went higher. It went all the way up to 24,000. You made another 20% on Bitcoin. But as we extended that, it began to get tired, and then it retraced back a little bit. Then it broke out again. Then look what it does. It goes a little bit higher in the short term, then it retraces. Then it broke out again, goes a little bit higher, then it retraces. You see the pattern of what I'm saying is that in a 10-day basis, it actually does really well. From a 11 to 45-day basis, it can be problematic with a correction. And then 45 days and beyond, those breakouts are telling you something, which is exactly what's happened here. Okay. And I want to talk about what just happened, but do you have any questions about that?
No, I think I'm interested in getting into where we are now relative to that giant spike. I mean, look at that acceleration that we've seen in the last few weeks, from which we're obviously currently receding.
Yeah, let's talk about that, because we'll get to your BlackRock question too. What's interesting here is that as we went to higher RSIs and then consolidated, we never really extended from the 50-day moving average that much, okay? Here's a cool thing on Bloomberg. I can go back and let's do this. I'm going to go to 0622. We can go back and actually look at the chart as if we were at that period. So here's what the chart looked like if we were in April of 22. See this extension from the 50-day moving average? Okay, it's a little bit extended. Then it gets a little bit more extended. Okay, then it gets a little extended. Okay, notice all of these. Okay, now we got pretty extended here in September of 2023. That one stayed up there for a while. Okay, but look at what it got here. But then this most recent move, we got crazy extended. And this period looks a lot like this period last year in October. I'd actually say it looks more like October, November, which is that, again, in the very short term, a high RSI is positive. In the intermediate to long term, it's positive. In that middle period, it can be problematic, especially when you put such great distance between the 50-day moving average and the asset. And this is where we begin to really play into momentum assets. And we talked about this. We've been talking about this at HX Daily a lot. a momentum stock or a momentum asset is basically a style where people go out and say, I want to buy stuff that's going up. Okay. And the criteria for a momentum investor is really that something has gone up and I think it's going to go up more. And so what momentum investing will do, and part of this is psychological, is they'll look and go, well, Bitcoin's gone up, basically every day since the end of January. It goes up an average of 3, 4, 5% a day. I'm going to go buy Bitcoin because it might go up 3, 4, 5% a day. And as more of those buyers come in and get more and more excited, it perpetuates the cycle and it continues going up, 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 up. But at some point, a number of things happen. You begin to exhaust those buyers. People that had bought the asset cheaper, let's say 50,000, now have big gains. They start to take profits. And then all of a sudden, it stops going up the same. I'm actually going to pull up the chart of where you can really see this happening real time, even more than Bitcoin, is NVIDIA. Okay. Take a look at the chart of NVIDIA. So here you see it got super extended for the 50-day moving average. Then all of a sudden, NVIDIA stopped going up on March 8th, okay? Now we've been churning. But what happens is these momentum assets, they never correct by going sideways. They're either going up or they're going down. The reason is that there's a very large amount of people that bought this asset that bought it only because they thought it was going to go up. So if a day goes, 2 days go, 3 days go, 4 days go, 5 days go, and I'm pointing to the chart here, and it doesn't go up, you know what they do? They sell. Because the reason they owned it, they didn't own Bitcoin because BlackRock's buying it. They didn't own Bitcoin because the dollar is being eroded away. They didn't own Bitcoin as a hedge against, global conflict. They owned it because it was going up. And once it stopped going up, they sell it. So what happens is, and we'll come back to this final part here, getting to the short term, is if you see a breakout to a very high RSI, I generally say take a little bit of profit. But in things like Bitcoin, I would say stick with it, stick with the rest of it. But every day that goes by that it sticks with that higher RSI and goes higher and higher, I just layer off on your trading portfolios. Just layer down, such that when you get to the point that you're here, you should be out of it. You should leave the last 10%. I always joke, leave the last 10% for God. Leave the last 10% there. Because when this corrects, it may correct so quickly and so violently that you won't have a chance to take profits, and you're gonna be caught in your head. So what I think is going to happen here, I think Bitcoin's headed back to 56,000 to these moving averages, or probably somewhere between 50 and 56,000. We can talk about why that level, and I think it could do it quickly. It could be there in a day, and it could be there in 2 weeks, but I think it's going to happen very, very quickly in that period. And then I do think that Bitcoin consolidates, and by year end, it's higher because of things like BlackRock, because of the intermediate term demand. So I know I'm throwing a lot of stuff in there. Ask me questions about that.
Things that are going through my mind right now as I'm looking at that chart. The first thing is I've looked at charts of, obviously, if you look at 2021, you see stuff going bananas, and I don't think there's been this rate of increase since 2021.
That's correct.
And so we hit a spike and we're coming back down, but historically, probably unlike more traditional stocks, there's a higher volatility in the crypto. So I've never seen it go straight up and then straight back down. There's often it goes straight up, it kind of comes down quickly, then there's a second rise and a second fall.
So let's deal with that. Let's pull up this larger chart here. This is all the way back to 21, 22. But let's talk about this for a second. Actually, I'm going to go back a little bit further. I'm going to go back to 2020. Let's go. I'm on January of 21. We got very extended from the 50-day moving average, and it corrected right down to the 50-day moving average, right? It got as high as 40,000 and then went back down to 31,000, okay? Now, my strategy would have had you laying off Bitcoin this entire time, okay? So you would have missed some of the end of this move. But I didn't say sell it. I certainly didn't say fucking go short it. Then I would have said, which is what I'm saying, you go in and buy it closer to the 50-day moving average. But the reality is that once you got this move, a lot of the real juice in Bitcoin, like the kind of trade I want to be in, which is I want the probability stacked. Over here, I had a big base and I had a breakout from a base. That's a trade I like. Now I've got a huge spike and I'm trading off spikes. All of a sudden I'm playing less, okay? Mind you, if I booked a bunch of profits, what I would do in this situation is I would do the following. Let's say I owned $100 of Bitcoin here, okay? This is at 10,000. I would have written it up and the Bitcoin went to 40,000. To be honest, with my trading strategy, you're probably looking at having $300 at that point, okay? I would then take 150 of that 300 and I'd put it over here. I'd put it in another account. Now I've got 150 what I call table stakes. This is a gambling thing. Now what I'll do is I'll trade this range and I'll go ahead and wait for Bitcoin to get very overbought again, wait for it to retrace to the 50-day moving average, and then kind of play with my table stakes over and over and over, okay? But I'm not going all in on the table because now I'm in uncharted territory. It's very volatile. It's very difficult, but just make it easy. If it goes back above an RSI of 80, 90, sell some. If it's on the 50-day moving average, buy some. But you're using half your stake, okay? And you've already booked your full profit. But then what you do is you wait. And then you wait for it to get to a very oversold period, okay? So remember, we're still only playing half our table stakes because we got this other half here. So if you went and bought, again, at the 50-day moving average here, you're now got half your table stakes. You're fully invested. You're not going to do any more. Then when it goes down, though, you save the rest until you get that low RSI, okay, till you get the RSI at 25. Because you're right. Like, we have to ask ourselves with Bitcoin right now, are we here, which is January of 21, or are we here, which is March of 21, or this point here? Again, you can see it here. This is September of 21, and then this is October of 21. I don't know, but I'd say this. I'd be playing with half the stakes that I was, and I'd be waiting to go all in again, not until I see a very, very low RSI.
I mean, let's say that you bought in halfway up the curve in that first spike in 21, around there.
So February, yeah.
Yeah.
What would I do then?
And when it now is on the downslope after that.
Yeah.
Which is basically where we are today.
Yeah, I wouldn't touch Bitcoin with a 10-foot pole right now.
Let's say you've got it in your portfolio right now, though.
I look at it more, what are my stakes that I have in it? Well, okay, so let's say why is it in your portfolio? Well, there's two groups of why it could be in the portfolio. It could be in the investing side of my portfolio where I just own 10% of my portfolio in Bitcoin and I'm not paying attention and I just think it's going to 1 million and I just sit there, I don't do a damn fucking thing. Let's say it's in my trading side of my portfolio. And let's say I decided I was going to trade 10% of my portfolio in Bitcoin or 10% of my trading portfolio, et cetera. I would look at it as allocations. 10 is all in, 0 is none in. I would, this is the funny thing. If you told me you were at 8 of 10 of your risk tolerance, I would sell some Bitcoin right now to bring it down to 4 or 2. If you told me you were at 2 or 4, I wouldn't do a darn thing. And if you told me you were at 0, I also wouldn't do a darn thing. So it's more about someone looking at what they own relative to kind of, and you have to look at things as a time spectrum. Like what is the most you're willing to own at any given, at sort of the bottom, so to speak, and where are you relative to that? So that's, because if you own it and you're trading it, but you're not willing to buy more, you leave yourself in a bad psychological and trading position. So the answer is short term. I feel, and we could talk about why the moving averages work. There's actual reasons why the moving averages work. It's not just fucking voodoo. But if you said to me, if you own half of what you would own at the bottom, you're okay. I'd rather own a third. If you're all in, I'd fucking sell some.
Right. And then this brings us to the other thing that I wanted to talk about, a general idea of correlation, right? Like there are some correlations with traditional companies to real world as well as to the market as a whole, right? Like, something about the Fed comes out and people react in a certain way. The question is like, are there any correlations that can be drawn with the real world in crypto? It does seem like there have been some to the economy as a whole. Are they inversely proportional? Are they proportional? Does it depend on the scenario?
Yeah, it's hard. It's the answer is it depends. Like, and this is the funny thing. It's true regularly that sometimes interest rate cuts make stocks go up, and sometimes they make them go down. Like, in the short term, and even in the intermediate term, because in theory, lower interest rates drive up the value of the assets and the discount rate and all that, but that's not really how it works. It's very situational. And what I'd say is this: in the intermediate term, I think that crypto benefits from an inflationary environment. It benefits from debasement of currencies, and it benefits from economic growth. Those are three intermediate, and the first one and two are kind of the same, but we'll treat them as two. What does all that mean? That means through time, dollars become worth less because we print more of them, and there's also inflation, and your dollar buys less. So you would want to hold your wealth in something that isn't decreasing in value or in terms of buying ability. The second piece, the next piece of that is economic growth. When people have jobs and are making money and the company's doing well, they're more likely to engage in speculation. If you lost your job, your crypto trading or your DraftKings betting goes down, right? It's just like, you got to eat. But if you're crushing it, you might do my table stakes thing, which is if you bet 100 and you made 300 and you put 150 aside, well, your risk tolerance on that 150 might be much higher than it was on your original 100, right? Because you got 150 in the bank now. So in the intermediate term, I would say that as long as we continue to see inflation, we continue to see debasement of the currency, and we see economic growth, that's a very positive intermediate term backdrop for crypto. And by the way, that's what we're seeing happen, right? Inflation's been picking up. Debasement of the currency. The Fed maybe isn't printing as many dollars as quickly, but I don't think anyone thinks that's stopping. And economic growth is stabilized and is picking up. In terms of where I think you were going, though, is there's a Fed meeting happening today or tomorrow, and the Fed comes out and says, "Oh, we're raising interest rates. We're doing this, that, or the other." I don't know that it really has any impact. If the Fed were to surprise the world, and let's say like the right now the perception is that the Fed's not going to raise rates at all this year. In fact, they're going to cut rates, and they're going to cut by 2, 3, 4, 5. But let's say the Fed came out tomorrow and said inflation's picking up. We're raising rates by 25 basis points. Everyone would freak the fuck out. Okay, all risk assets would just get crushed that day. Not because the value of the risk assets changed all that much, but because people say, oh my God, I don't know what this means. I'm going to freak out. And Bitcoin would get fucking destroyed in that scenario. Okay. Now, the funny thing is, if you thought intermediate term, you said, well, the Fed's raising rates to fight inflation, but that means inflation's high and Bitcoin's a protection against inflation. In some ways, I could argue it's better for Bitcoin. All that gets thrown out. It's about what the marginal seller wants to do. So what I would say is that I don't think in the short term, the majority of the time, crypto is very influenced by macro factors, or especially specific macro factors. It's most influenced by what's happening to risk assets, meaning are markets doing well, or markets doing poorly? But it's relatively uncorrelated, to be honest.
Yeah.
And can I show you one thing too here? Because
sure,
let's do this. This is the chart of Bitcoin in the last couple of years, and then I'm putting the rate of the U.S. government bond on top of it. Okay, so look at this. The government bonds interest rates from August of 22 went from 2.69, okay, to a high last year of 4.92. In that same period, Bitcoin went from 21,000, got hit, but in that same period went to 37,000. Bitcoin doubled while rates went higher. So my point is, one would argue that higher rates should reduce the value of risk assets, but this part actually exactly says what I'm saying here, is that it is Sometimes it really matters, sometimes it doesn't. Here, when we first began the regime change in rates, I'm going to throw up one other chart here. This is the Fed funds rate. Okay, the last chart. You can't kind of say, I'm going to take this chart off in a second, but let's just note this date here. This is March of 22. This is when they first started raising rates. Okay, let's go back. March of 22. Look what happens to Bitcoin from March of 22. It's at 47,000 and it bottoms 6 months later at 15,000. It gets cut by 2/3. As the Fed is raising rates, when they first started raising rates, as the interest rates started going up, okay? So during that period, I would argue that higher rates, which were bringing us from a speculative environment to a much less speculative environment, crushed Bitcoin. But then rates settled in and moved higher. And now the last two, as rates have moved higher, Bitcoin's moved higher. They decoupled. And so this is my point is that I think, and let's make this very valuable, okay? I think that with Bitcoin, and this is true for really all the cryptos, there's really only two strategies. Buy and hold, where you say it's digital gold. I got 10% of my portfolio in it, and it's going to be higher. It could be 75,000, 750,000, 7.5 million. And we're gonna have it there, okay? And then trading. And trading you do around the ranges using the RSIs and a couple other technical indicators. Everything else, trying to trade it around macro, trying to trade that, I just don't think it's going to work because it'll change through time.
And the other side of correlation is, obviously you're assuming that crypto is 10% of a larger portfolio. Is, let's say, within the crypto bubble, trying to
play other cryptos,
sort of diversify. Like that seems completely either useless or arbitrary to say like, well, I'm worried about Bitcoin, so I'll buy Ethereum, or I'm Ethereum, so I'm going to buy Dogecoin. Like they are essentially synonymous. Like, so the idea.
Exactly. So
because none of them have intrinsic value.
Yeah, exactly. So, but there's a strategy here. There's a strategy. Okay. This is what you do. It's a hierarchy. At the top of the hierarchy sits Bitcoin, digital gold. Then Ethereum is, and this won't be exactly the right example, is digital silver. Okay, right. We know it's going to have value. It's right there, but it's not as popular as gold, right? Now, but like silver, it has a lot more industrial uses. Okay, then you basically fall into three tiers below those two. You have a group of coins like Solana that. And Ethereum has industrial uses because it has blockchain usefulness, okay? And I'm not going to go into all that. Just use my silver example. There's a lot more silver used in industry than there is gold. And the same is true of Bitcoin and all that because they're beginning to use Bitcoin in blockchain technologies to take advantage of it. You then have a group that are highly functional coins in theory, things like Solana. Below that, you have established complete speculative bullshit, Dogecoin. And below that, you've got up-and-coming complete speculative bullshit, dogwifhat. I don't know, have you seen dogwifhat?
I haven't seen dogwifhat, but the Pepe coin.
There's a coin. There's a coin, and I maybe when you do this video here, we'll see. Let me actually go. I'm going to go here. Let's look up dogwifhat. I read about this the other day. There's a fucking coin out there that is literally called dogwifhat coin. Okay, here we go. Dogwifhat. Okay, I'm sorry.
Yes, I did see that. There was a big announcement of it, and it was like on a
So dogwifhat. Let's look at this chart for a second. This is a coin let's go look at the 1 year chart. This is dogwifhat. So here's my point: is Bitcoin is digital gold. Ethereum is digital silver. Solana is digital palladium platinum. It still has a use, etc. Then you've got established bullshit and you've got completely, totally motherfucking speculative bullshit. What I would say is this, is I like the idea of having part of your portfolio in that, like, lock it away. Bitcoin's going to 75,000, 750, 7.5 million. Then what I would do is if you're doing a trading portfolio, as you get some gains, I would filter out the gains. I'd say if I was sitting, remember that 150 we talked about before? As things got spicier and spicier, I'd go and say, well, I'm going to take my 150 and I'm going to trade 100 of it around Bitcoin and Ethereum. But I'm going to take the 50 and I might seed it in 10 of these coins. Okay. Wait till everything's down. So now we're playing with money. You have to be willing to lose all that money. You got to be like, the 50's gone. But then I do this at 16.66 each. I'd wait for things to be down. Well, this is exactly what I do. This is going to sound crazy. 16.66 stakes each. I take 8.8 and I'd buy some of the Palladium type coins. I'd buy some of the established BS and I'd buy some of the stupid, like crazy, ridiculous BS. And now I've got 25 deployed. Then I'd wait for them to go down a lot if that happens. And I buy another 25 and then I'm done. I'm done. But remember, we're playing with 50 of our 300. Here's what happens. If these things go more ballistic, I've now deployed $25 and I make 25, I make 50, I make 100 and just let it ride, but take profits away. If they go down, I'll buy down a little. But what you're doing is you're kind of, you're using table stakes to play into the speculation because, you know, there's George Soros, there was a saying is like, when I see bubbles, I run to them, not away from them. That's actually a great saying, and there's a ton of money to be made. The key is managing your stakes at that table, right? If you start with 100, I'm guessing that 100 is something that you wanted to keep or want to have, et cetera. Then when you make a lot of money, book a bunch of it, and then you can go down the speculation scale. Half the profits you're going to do on things that are speculative, but, you know, seem to have some basis in reality. The other one, but to your point, you're just making, when you buy dogwifhat, you're making one and only bet. You're making the bet that the world has a chance to get crazy. So, by the way, I don't disagree with that, but just make that bet. You know, you're making a bet on, like, when you go look at the odds for any team to win the World Series, like they're not. You're making a bet that this XYZ team's going to win the World Series. Okay, it could happen, but it's a low probability bet. You need to treat it as such.
I'll tell you what I bought into, which was, if we take 100, 50 Ethereum,
okay,
25 Solana.
Solana.
Yeah. Maybe 12. I mean, I could look it up, but it followed that proportion. It was, and I didn't do Bitcoin because my thought was, yeah, it's the gold, but can its rate of increase, can its multiple go up as high as something that is sitting lower? You know, something like Solana, if it was at $100 when I bought it, and actually over the up until a few days ago, that one banked the highest profits, and I did. Yeah. I was talking to you, and I did. I took all my profits out of that one.
Yep.
Like that one actually did the best, and the others did well as well. But to me, that's the only idea. Is like they're all 100% correlated, but can something that's at sort of a lower, fresher price have the potential to 10, you know, Bitcoin 10xing is a hell of a lot less likely than actually dog with a hat.
So let me dogwifhat, WIF. But you kind of said, let's go back to what I was saying here. We give Bitcoin. So in finance, this is called beta, right? The move relative to another asset. Let's call Bitcoin beta 1. Ethereum beta, by the way, is 1.1. It's, you know, it doesn't really move that much more than Bitcoin. Okay. Just like silver and gold. Those are not particularly that correlated, but I'd say that Solana and that tier of coins are probably a beta of 2 or 3. Doge, if they work, have a beta of 3 or more, and the complete and total unknown shit coins have a beta of 10. But the problem with those betas is they are binary, right? Is that it's not that if Bitcoin goes up, dogwifhat is going to go up. It's that if Bitcoin goes up and then dogwifhat happens to go up, dogwifhat can go up 10 times what Bitcoin goes up. But it doesn't mean dogwifhat's going to do anything. So again, you know, and look, I'm not against this. This is just this part of it. So buying Bitcoin and holding Bitcoin or Ethereum in your portfolio is a really sound, logical investment that you can make that has good logic behind it, can be good for your portfolio. We'll end the call. We'll end today's episode on this. That's the first thing I'll say. Trading Bitcoin and established cryptos around sound methodologies is also an incredibly well thought out, excellent plan. Once you start getting down to shit coins, meme coins, dogwifhat, etc., you really are in Vegas. So the same way that if you went to Vegas, and I'm not a roulette guy because I don't like the odds, but you went to Vegas and you said, okay, I just made $100. I'm going to take $50. I'm going to put on each of the 32 numbers because I know one of them is going to win. And I'm going to make a lot of money, okay? It's obviously a terrible bet if you know the odds. But that's actually kind of the fact, is it's a terrible bet. The only thing that I'll say here is the odds of one of those bets paying off as Bitcoin is going up and to the right, as we see the speculation gets higher. So that's maybe, let's go back. I want to bring this, let's talk about, end with shit coins. And so let's come back here for a second. Number one, as an investment, I think established cryptos are very strong. Number two, to trade, I think established cryptos are very strong. Number three, to trade shit coins, okay? I actually think that if we are in an environment of established speculation, there is some validity to seeding out a bunch of meme coins, shit coins, etc., because it's a little bit like it's raining outside. There's clouds in the sky. Speculation's out. You don't know that there's going to be a giant storm that's going to have 3 gallons of water, 6 inches of rain, but it might. Because what I don't want to do is go bet on a bunch of shit coins when it's perfectly sunny outside, right? Because I know it's not a speculative environment. It's a bad analogy, but you get my point, is that weather's a lot like assets, right? And trends in assets. When we know things are moving higher and everything's moving higher, the chances that some shit coin goes up tenfold are much higher. When everything's down and down 50%, the chances of some shit coin going parabolic are zero, if not negative. Right now, we're in the rainy season, and so I think those trades make sense. But understand what you're doing, man. You're going to Vegas. You're playing roulette. They're not good odds. If you want to do intelligent stuff, there's a role for it, but you need to think about it.
And in terms of predictors, getting back to just the big picture of where we are now, whether we're just on, there's sort of no real history of indicators right now. Is this downturn that we're on? Is this spike a one-time spike? Is it the first of 3 spikes before we I'll say, settle back in?
I'll say this to you. This is what I said before. We'll end on this. Let's go back to that period before, all the way back in 2021.
21, right?
As I said, the juiciest part of the lemon was the first spike from a big base, okay? And after that, I would only play with table stakes. So here, 2020, 10,000, boom. This move from 10,000 to 40,000, great. I would book all your profits, book enough profits that whatever you originally were playing with, put aside. And from there, I'd only play with the remainder half. I think we are here right now. I think maybe we're here. Most likely we're here. So I say maybe we're in January of 21. Maybe we're in February of 21, okay? But we're not in a point where it's going to go from 10,000 to 40,000, right? From January of 21, at 36,000, yeah, it almost doubled, but it didn't go up fourfold. And then from February of 21, yeah, it went up 20%, but you were sitting on big fucking losses 3 months later, 4 months later. So we're somewhere around here. So what I'd say is for the short to intermediate term, I'd trade it. Very short term, I wouldn't touch it to the 50-day moving average. Intermediate term, I'd be trading with half stakes. Long term, look, I think we're in. Let's just do this. Well, this thing's so crazy that pulling up a max chart doesn't really do it justice. But we'll pull it up. There's the max chart. I think we will reset to a level above here. Probably something with 100 in front of it sometime in the next 18 months. And I think we just stair step here. And I do I believe Bitcoin a million? Yeah, I could easily believe Bitcoin a million. I don't see any reason why not. Like, I think we're entering into a more and more digital age, more young people. And the one thing I'll say with Bitcoin that is underestimated is international. In the States, we don't get it. People in Turkey, people in the Middle East, people in Africa, people in Latin America, they're all moving to Bitcoin because they don't trust their governments, because they don't trust what's happening around them, and they feel that this is a way that they can get some degree of certainty. So that wave alone.
And some Latin American governments are moving to
that
currency.
That guy's brilliant. The El Salvador guy. He looks like a friggin' legend right now, and he should.
Yeah.
He should. It's the right bet. So just let's go to this last thing, and we'll end with this. Trade a lot or don't trade at all. That's actually what I'm saying. That's one of our sayings, is with the established cryptos, either put them away and go the fuck away, or trade the hell out of them with a really good, and then my other one, plan the trade the plan. You got to have a plan here, because if not, with the way these things rip the volatility, your emotions are going to rip you apart. So, okay, great. Matt, I want to thank you. Thanks everyone. I know this is a little bit of a different format, but I also want you to reach out to us on our socials or via email. We're happy to actually bring some more folks on and talk about issues like this. NVIDIA, crypto, you name it. We'll go through it with you. And again, thanks for supporting HX Research. You can follow us on Twitter, Facebook, LinkedIn. I don't know if all you know that we're on Facebook and LinkedIn, and we look forward to seeing you next week.